Hello, everyone. Hi, this is Devansh Lakhani, founder and director of Lakhani Financial Services, a chartered accountant by qualification, and now running a boutique investment banking firm and also angel investing in startups. First of all, apologies for not being consistent on LinkedIn Live for the last month. I think I've not been able to do a LinkedIn Live over the last 3 weeks, last 3 Mondays, but here I am again. There's a lot of things that is happening, and we are trying to grow, we are trying to build, and I have been traveling off late quite a bit, so not being able to remove that much time for a research, for finding out some good topics, to do some good research, and also to do this live, and hence it has been little bit taken aback. But here I am again, on this very good Monday evening, in front of you guys, and trying to put out a topic which is very intriguing, and probably not very much spoken in the startup ecosystem, and that is about uh, LPs, that is limited partners. Uh, Hi, Mukammal. Hi, AR Agarwal. Okay. Hi, guys. Hi. Thanks a lot for joining. Thank you. Just stay till the end because this is going to be a very interesting topic. Not many people are very well versed with these terms. Not many people know who is LP, and what are LPs basically, and what is their role in the startup ecosystem. But to start off, or let's just begin on this particular topic. First of all, LPs means limited partners. All right. So there are two types of partners in a venture capital fund. One is an LP, that is a limited partner, and the other is a GP, that is a general partner. So now, what's the differentiated? What is the difference between these two partners? Right. First and foremost, LP means that first person or the first institution who invests to build that VC fund. All right. The LP is the main person or a main institution that is bringing in the capital to the VC fund, who's providing that money to the VC fund. Okay, hey, XYZ fund, you go manage this capital well, use it for the next 5 to 10 years till the time you'll receive the returns back, and you'll exit from your portfolio companies. Okay, but I want this X amount of returns on your investments in a particular fund. And GP means general partners, which means that the general partner is assigned the duty and the responsibility to manage the funds of the LP via this venture capital fund in the most efficient manner. All the deployment of the funds, to select which startups to invest, to go and reach out to various LPs to raise funds for their VCs, to meet all the compliance regulatory requirements, is the duty of the GP. The GP is the person who is handling or managing the day-to-day operations, who is doing the investments, taking decisions to invest in a company or not to invest in a company. That person is called a GP, general partner, which we will cover in another live altogether. But here the topic is more about LPs, and I hope that LP definition is clear, right? So now these LPs are people, who they are also institutions, not just individual people, which I'll come to in terms of what are the types of LPs that are there, right? Limited partners basically invest in a venture capital fund because we are talking about the startup ecosystem, and hence I'm putting the VC as the forefront. But otherwise, LPs also invest in other assets, which is also another topic which I'm going to come to. But if they invest in a VC, they benchmark their returns in comparison to various other asset classes, or various other returns which other asset classes are giving, right? For example, they benchmark themselves to say Nifty 50 returns, say Sensex 30, BSE 30 returns, okay, say Nifty mid cap returns. It can be even, they'll not benchmark it to real estate because real estate is more like a inflationary hedge in terms of asset allocation for such big people or institutions. But when you call it like much more faster giving returns, sorry, much more better giving returns, they'll benchmark it for to them. And what better than equity markets or stock markets, right? So that is something that they benchmark themselves to, and they try to perceive, or they try to put that target to the JPs or to the fund in a manner that they want to create that alpha over and above the Nifty 50 returns, or over and above the BSE Sensex returns, right? So these are LPs, limited, sorry, not limited, yeah, limited partners, not limited liability partnership, but limited partners. Okay. Uh, okay, so before I proceed ahead, I think there's one question from Shakti which I would like to answer. Limited partnership involves equity as well. Shakti, I don't really understand what you're trying to ask. Is it the limited liability partnership, LLP? Are you talking about limited partners, that is LP? Um, I don't know what you are trying to ask, but just to probably again generalize it, LPs are the first people who invest in a venture capital fund. From there on, that VC invests into startups and creates the returns or manages their portfolio, etc. But the first person or institution who invests is the LP, the limited partner. All right. Now coming to the second topic again, there are multiple types of LPs. Okay, LPs सिर्फ एक तरह के से नहीं होते, या एक लोग नहीं होते, या एक institution नहीं होता. Okay, there are multiple kinds of LPs. All right. Now, in so even if we compare it to US and with India, the US industry is much more developed, probably 100 times more developed, the venture capital industry, than what the Indian industry is. But there are some similarities. Okay, there are some similarities in the kind of the types of LPs that are there, but US has multiple kinds of LPs. So pardon me if I'm going to use more US examples, US based examples, because those will be more relevant and much more matured market. Maybe in Indian terms or in Indian companies or Indian institutions, we'll see less of it. It is increasing, it is really coming off age now, the Indian VC industry. But still, US being a much more matured market, you will really connect with those examples. So first kind of LP is a university endowment. Now, what is a university endowment? Say, for example, there is Yale University, Stanford University. In India, you can say it like IITs, IIMs, right? So these universities have the endowment fund. Okay. And that endowment fund is basically, these are all donation based funds, okay, where they're receiving donations from multiple parties. Okay, in India we know why donation is used, but and might not be official, also might be official, I don't know. But to give you more specific example in terms of US based, these universities create the endowment fund on the donations that they receive, and then they provide that as an investment. Okay, these funds, these endowment funds, are utilized as investment to be invested in different asset classes, and those asset classes can be designed as per that university's return and risk return criteria, basically. Okay, so that's the first kind of investment, the LPs that are there, and which are coming up in India, but more so in USA. Second one is foundations. So foundations means, you can call it like, say, these are the not for profit foundations, but the donations that they receive and which are lying idle, which are still not utilized in any good work or any social work or NGO kind of work. Where do they put those funds? They can put those funds into some investment opportunities. All right, so for example, there's a Tata fund in India, there's a Reliance Foundation in India, Adani Foundation in India, Aditya Birla Foundation in India. So these are certain foundations, at least in India, of the top business honchos who regularly invest. Okay, and I'm not saying investing in startups or VCs, but these guys invest. They invest in FDs, they invest in real estate, they invest in gold, they invest in public equities, whatever. But these are kind of institutional LPs that are there, and some of them do invest in startups or have started investing in startups. Okay, number three is corporate funds. Okay, so corporates also now in India more so have started really segregating a certain amount of fund or a department or a team, and they're creating that fund within the corporate to invest in VCs or to invest in startups. Okay, so there are corporate funds in US also. IBM pension fund is there, Google pension fund is there. So these kind of funds are there which invest as LPs in venture capital funds. Fourth is family offices. Family offices are really common. In India, also, there are many, many family offices of all these top business houses and corporate houses, basically. In US, also, it is there. So, these family offices are, again, certain people that an organization which has a separate team altogether to invest in VCs. Okay, and these family offices, at least in India, many of them with whom we are connected also, a few of them, they invest just in VCs as a LP partner, as a limited partner. Okay, because they don't want to take the risk of screening each startup and being involved in the investment journey or the process. They want to be free. Okay, I've given my money to the VC. Now the VC can handle it professionally as per his criterias. All right, so that's how the mindset works. And some family offices like to invest directly into equity of the startup. So those guys are more active players, so to say, and they like to be behind their money when the money is being deployed somewhere. Okay, but family offices are one types of LP, and they do invest in venture capital funds. Then comes insurance companies and even banks that are there. So whether it's in US, whether it's in India, there are a few insurance companies and banks which have their separate units that can invest into more risk taking assets like venture capital funds. All right. So, because this part of the domain is not completely developed in India, I would say in US, whether it's MetLife, whether it's Nippon Life, all these companies, they all have a separate department which takes care, which is like an investment arm of that particular company, that insurance company. So, insurance companies are also major investors in venture capital funds. All right. And last, but not the least, is the fund of funds. These are basically already large funds, and they separately also invest in some big companies or in startups, but they also like to invest in another venture capital fund as an LP. Okay, so that is the meaning of fund of funds. They are already a fund, but now they are becoming a fund of fund by investing in another venture capital fund and becoming a limited partner there. Because there they don't have to do a lot of due diligence or anything. They just have to straight invest. Right. So that is, these are certain 5 to 6 or 7 kinds of institutions that really become limited partners in the venture capital funds, and they back those venture capital funds when the VC is required to raise money to invest into startups. So the all the hue and cry that we hear, that this startup has raised this much money from VC fund, this startup has raised $10 billion, $50 million, XYZ from this fund. You must remember that this VC fund is not generating money on its own. Okay. This VC fund, the general partner of the VC fund, is raising money from that LP. तो जितना मेहनत स्टार्टअप फाउंडर करता है वीसी से फंड रेज करने के लिए, उतना ही मेहनत वो वीसी फंड का जीपी also does to raise funds from the LP. Of course, the connections and networking is much stronger because they've done that, been there, done that for probably 10, 15 years, have good connections. Vis-a-vis a startup founder who is probably just started out, he has no connections with VC, nothing in the industry, uh, you know. So that's a difference, but it's the same task. A founder raises funds from VC, a VC raises funds from LP. Okay, and LP is predominantly comes as an institution. Very few individual LPs honge who have the lot of their wealth and they want to park in a VC. But most of the LPs are institutions, and they have a lot of side wealth that is just lying idle, earning 4 to 5% interest in savings bank or in FDs, which they want to deploy in higher, risk, higher return kind of asset classes. And one of them is a venture capital fund. All right. So that is the second topic. Before we proceed ahead, would probably love to know if you all have any doubts or any questions still here. Hi, Dhirendra. Okay, if any doubts, do let me know, guys. Yes, Mona, VC funds are completely answerable to the LPs because it's the LPs' money after all. It's not the fund's money, so they're answerable. Okay, so moving to the next, one point which I wanted to also just speak upon is that where do LPs invest? Okay. Now there are three kind of asset classes predominantly, and this is where also LPs invest, other than some other people also investing. But LPs invest in these three kind of asset classes. One is growth assets, one is inflationary hedge assets, and one is deflationary hedge assets. All right. So growth assets, there are three kinds of it. Number one is growth equities, public equities. Sorry, so public equities means listed stock exchange. Okay, listed stocks, listed companies on the stock exchange. Very simple. I'm sure most of you guys attending this live or who will be seeing the recorded version when it's upon once it's live on LinkedIn know what stock markets are, right? Or investing into mutual funds. So some LPs do invest into stock markets, into mutual funds to generate a certain rate of return. And that's the first kind in growth assets. The second is private equity. Private equity includes equity of startups, includes equity of unlisted, little bit more bigger companies, mature companies, you know, and those guys, the LPs, they try to, also invest into such kind of assets, right? Their money gets invested into such kind of assets. Um, they don't directly invest into such companies. They invest into a fund that invests into these assets. So when they are investing in stocks also, they don't directly invest. They invest it in a fund. Say for example, they'll park it with Quantum Mutual Fund. They'll park it with Motilal Oswal Private Equity Fund, and that fund will then invest it because they have the expertise to scout the businesses, and this LP has the expertise of money and he wants to generate returns. It's very simple relationship, right? So private equities is one, and third can be hedge funds. Hedge funds is again to do with the funds that invest in capital markets, but they are much more trading funds where you're creating short-term bets and hedging your portfolio, buying, selling very quickly to generate that quick alpha, that quick return, which is required. Right. Then comes the inflationary hedge asset classes. First and foremost is real estate. Okay, as I had mentioned earlier also in this live. So real estate is something where it's a inflationary bet, right? So when the inflation is rising, okay, when the cost of purchasing is going up, that underlying value of the property also starts increasing. All right, this is where the VCs, sorry, the LPs like to invest in a fund that invests into real estate. Okay, so that is something. Real estate is an inflationary bet. When the inflation is rising, always notice that property prices will go up. The underlying price of property will go up, right? And that is where when LP estimates that now is the time when inflation is going to come in, so they start investing into inflationary hedge assets, and they pull out their money from such risky assets like the growth assets. Okay. Second comes commodities, so gold and silver, other precious metals. All right. So these kinds are again inflationary hedge. Okay. So when the inflation is uh, going up, right, that is when the interest rates come down. Okay, sorry, the interest rates also increase. All right, this is when investors like to invest in gold or into silver, that are all these precious metals basically, because when the interest rates are going up, the gold prices also increases. All right, this is how the demand supply of the gold works. Correct. So that is when these LPs invest in a fund that invests into gold, okay, or silver for that matter. And the third is any natural resources, which is oil and gas. So people who are interested into oil and gas, again, that's an inflationary hedge, right? So when inflation is creeping in, So that time you will see that all these raw materials, the demand for all these raw materials will start coming up. Okay, and when it is increasing, the demand for these precious metals, which become a part of the raw materials, that will also start increasing, and which increases the prices, and hence an investment opportunity for an LP. All right, and the third kind of category is deflationary hedge. First is bonds in that. Okay, so when you see that when what do you call, with deflation, when your inflation rate is decreasing or you're going into a recession kind of a period, the interest rates will also fall. Okay, when the interest rates fall, what happens is the price of the bond increases, and it creates a good investment opportunity for such people. All right, you don't get a huge alpha, but you don't make a loss, so you try to make that little bit good returns better than your FD rates. Okay, and that is why people invest in such fast moving bonds when it's a deflationary or a recessionary kind of a period. All right, right now also, if you would have noticed, when we are in talks of a recession, etc., the stock markets fell. People pulled out money from the startups also, because they all are growth assets. People like to play safe when it's a recessionary thing, and they all invested into bonds or debt funds, right? All these LPs also, when they pulled out of VC and they put VCs under pressure, VCs stop funding startups right now. So those all people, they were actually investing into debt, and once they see that reversing, they'll again invest into the VC who's investing in a startup. And a second deflationary hedge is cash. So you keep your cash even when the inflation goes up, inflation goes down, does not really matter. When the inflation is going down, your value of the cash reserves is literally going up. So then you keep it as cash reserves, right? So these are the kind of investment opportunities which a limited partner generally brings along or has when they decide to invest somewhere. And they always want to invest, they're always looking for investment, so that is why these so many options are there, right? uh, I think it is very important for one to know that when you read about that, okay, the funding has dried, VC funding has dried and everything, I think it's very important and crucial to understand that it's not the VC funding that has dried. VC का जो फादर है उसने पॉकेट मनी देना बंद कर दिया. So you need to take it into that example where VC is you know, a guy and he's having a lot of he's getting pocket money from his father, and the father is the LP, right? So it's very important to understand that if the father stops giving the pocket money, then VC can't spend on startups. Okay, so VC can't spend on toys. The kid can't spend on toys. Okay, so it is, everything is in the hands of the LP. This whole financial ecosystem is based because of the LP. अगर वो लोग पैसे नहीं डालेंगे, so there are no VCs. If there are no VCs, there are no startups. Like, it becomes difficult for a startup to grow. Then, uh, whom will they go to raise funds from? So, very important to understand this backdrop. I hope it has really added value to you guys, which I sincerely wanted to at the start of this live, and I hope I have been able to do that. So, thanks a lot, everyone, for joining on this live, and I'm happy to take any questions, if any. Please do shoot any kind of questions. So, Kuldeep, uh, how we connect with LPs? A startup founder should not and probably cannot connect to an LP. It's very difficult because they are big institutions and they'll not invest in a startup individually. They'll invest in a fund. Any further questions? Happy to answer. Okay, so I see there are no further questions on this. I would love to tell you guys that on the 29th of January, we are holding our flagship startup fundraising masterclass. And though not about LP, but about startups, we're going to discuss the complete fundraising process, a fundraising journey, how a startup must look at this as a process and as a journey and not as a destination, and what is the complete step by step guide on how a startup can really raise funds successfully from VCs, from angel investors, or maybe government grants also, whatever it is that they'll come to know a complete step by step guide as to how they can really go ahead, raise funds in the right manner, not in a manner just to go about and, I want to raise funds, I want to raise funds. They'll really get an understanding, first of all, whether they are eligible to raise funds also or not. Okay, or and if they are not, then why they are not and what they should be working upon, and if they are, then how they can raise funds, most likely with the help of LFS itself. All right, so this is the whole startup fundraising masterclass. It's a 3-hour masterclass, an online webinar. Mind you guys, it is going to be a paid one, but that paid amount is really very reasonable in terms of the value that we want to give. But we are charging that much amount, which is 99 rupees per registration, is because we want serious founders in that masterclass who are actually looking to raise funds, who are actually thriving, or building up something, building up a startup and creating a good and a sustainable model. So I'm going to put the link of this registration in the comment section once I upload it on LinkedIn. Would love to see how many of you guys really attend this masterclass and probably help you guys raise funds and give you a thorough process on this particular activity. So thanks a lot, guys. It was great to do this live again, as I said at the start of it, after 3 weeks, and it's good to be back on LinkedIn Live with my family out here. Thanks a lot, guys. I'll see you soon next Monday. Thank you.